Hey everyone, Cathie back to another video for you today. So let's talk about Teladoc. Most of you will probably follow this company for a while, whether you were a Livongo shareholder or just a Teladoc shareholder, or maybe you're holding ARK Genomics ETF, which Teladoc is probably the biggest holding there. I believe Teladoc is the third biggest holding overall in all ARK's ETFs. We're going to have a quick look at the end of this video how much they're holding in each ETF. But in this video, I just want to show you why the stock going down does not mean that the company is not becoming better and better. We're going to have a look at the earnings report. I'm going to compare that to one of their main competitors, Amwell, and you're going to see that Teladoc is actually performing very, very well if you compare that to one of their competitors. There's also some positive news that came out lately. As you can see right here, Google shuts down Unified Health Division as chief leaves company. Most of the fears out there were that Google or Apple or Amazon were coming into the health industry and going to steal Teladoc's lunch. Well, one of the big guys is already gone. Then this was brought to my attention. This is from 2015. So back then they lost Highmark, a $1.5 million contract, which was pretty significant for Teladoc. Now, if you go on the Highmark website, you can see that Teladoc services is being offered again by Highmark, Amwell as well. But that just shows you that if the business continues to grow and become better and better over time, those contracts that have been lost 5 years ago, 6 years ago will be coming back. Now, by the way, since they lost that contract, Teladoc has increased their revenue by 27 times. Just so you know. Alright, now before I jump into this earnings report, I just want to thank today's sponsor, The Motley Fool. And again, these are my views and my views only. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, Teladoc earnings report. It was a while back, 3 weeks ago. I covered that as well in my Substack, which is free for everyone. Link will be down in the description and in the pinned comment. So the second quarter revenue grew 109% year over year to $503 million. That's also an increase of 10.8% quarter over quarter, which is driving the full year revenue outlook to $2 billion to $2.025 billion. Total second quarter visits was 3.5 million, 28% higher than last year and 10.9% higher than the previous quarter. Also last year, that was the first wave of the pandemic, so quite a nice increase on that as well. They had a significant new agreement with HCSC to provide Teladoc Health Suite of whole person chronic care solutions. HCSC is the 5th largest health insurance company in the United States. So very significant agreement. Now let's go and look at Amwell. So Amwell's revenue is significantly lower than Teladoc. $60.2 million for that revenue, only a 5% increase from the previous quarter. Total visits of 1.3 million versus 1.6 million last quarter. So this is actually decreasing for them. While Teladoc is increasing year over year and quarter over quarter, Amwell is actually decreasing quarter over quarter. So maybe this is just a COVID stock just applies to Amwell and not for Teladoc. But funny enough, when Amwell reported these earnings, which were worse than Teladoc, Teladoc stock fell as well, which makes no sense at all. Usually, if you see one of your competitors doing way worse than you, your stock should be going up and their stock should be going down. Now for Teladoc's third quarter, they expect revenue to be between $510 and $520 million. That's again an increase quarter over quarter. Total visits to stay the same a bit. I do believe that that might actually increase because of the fears of the Delta variant and everything that's going on right now. Now you should be aware of the net losses of that company. That should continue probably for the next couple of quarters because of the expenses regarding the acquisition of Livongo. This is going to take a while. Yes, stock-based compensation, just expenses regarding that merger, etc. But overall, this isn't really affecting the fundamentals of Teladoc's business. The fundamentals are very, very good. They're increasing quarter over quarter, year over year. This is not going to be, oh, this is a COVID stock. After that, Livongo, Teladoc is going out of business. Not at all, and the numbers don't lie. Now, I don't know if you remember, but a couple of weeks back, we had some news coming out that CVS Health launches first nationwide virtual primary care solutions. So obviously everybody was panicking. The market was probably reacting very, very harshly. But now that we have more information, we can see that it is actually powered by Teladoc. And this again shows you how well Teladoc is doing. Teladoc is growing. Agreements are coming in left and right. I believe 2022 will be an amazing year for Teladoc, despite the fears of this being only a COVID play. Right now, before we end this video, let's go have a quick look at ARK's ETFs. So I'll start with the ARK-F, the FinTech Innovation ETF. You can see here that Teladoc is number 16, approximately 576,000 shares, a market value of close to $80 million. Moving on to the ARK Genomics ETF, obviously Teladoc, the number one there, 3.8 million shares, market value of $500 million. And then the main one, the ARK Innovation ETF, Teladoc, number 2 with 8.5 million shares, market value of $1.1 billion. So I think it's safe to say that ARK is pretty confident that Teladoc is not just a COVID play, it's something that will grow and grow more in the future. New ways for us to interact with our doctors, with our physicians, new ways for hospitals and institutions to work better with the data that they have to provide better services. So to conclude, like I said, I do not hold Teladoc directly. I hold it through the ARK Genomics ETF. Plan on holding that for a long time because I do believe that this segment is ripe for disruption, and this is something that will just improve over time. Yes, the stock has not been great this year, but if you're long-term investors, you shouldn't care about what happens in the short term. You should maybe even take advantage of it as the business becomes better and better and the stock price doesn't move. This is your way to increase your position and increase your return on investment in the long term. So yes, I'm bullish on Teladoc. I'm bullish on this whole genomic sector, but I hold the ETF and not individual stocks. And that will be it for this video. Let me know down in the comments below if you hold Teladoc or if you hold ARK Genomics. Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.